Are there any tricks that you've learned over your years of experience here, Ralph, in terms of your own risk management and how tight, because of course you can't have it both ways, right? You have a tight stop and you're going to get stopped out more often. You have a loose stop and you're not going to get stopped out as often, but when you do, it's going to hurt a lot more. So how do
Well,
you approach risk management with charts?
it depends on what style of trading or investing that you do. If you're a short-term intraday trader, by all means, you're going to be in and out a lot quicker.
Mm,
I've never, in all my years, that was not my orientation. I was always an analyst, and when I wrote a market letter, the company always wanted me to go out. You know, every year I had to put under my client's Christmas tree my forecast for the next 12 months, my annual forecast. Then I did a weekly letter to update that. So that would be like the long term would be monthly, weekly, monthly charts, and then weekly I do the update and see that we're still on course. And then I always had one of my team members would do a daily bar chart, a
hmm
daily market letter. So I try to cover all aspects, and in doing so, I would use different kinds of charts. So if you're doing daily, it would be daily and intraday charts.
hmm
But that was not my orientation as an analyst. I was
Uh-huh.
always intermediate to longer term oriented.
And so were you looking more at weekly charts for that weekly newsletter that you were
Well,
doing?
no,
If I
I
remember
look at
correctly,
the
wasn't that like on Sundays with a glass of wine or something?
yeah, my Merlot and Mansfield. Yes. Oh, you
Yes.
heard about that story?
I remember chatting with you about it. Yeah.
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 Yeah. Well, the Mansfield charts, that was a service that I had hand delivered to me on Saturday.
Uh-huh.
Most people got it mailed to them, and I would sit there on Sunday and go through all the charts. They had all the S&P 500 stocks in there, and I'd try to find the breakouts, and that was that was a weekly look. So those were intermediate to longer term
Mhm.
moves. That was
Yeah.
my orientation. Jay Woods is just the exact opposite. His was minute, second by second. So
Yeah.
this is good dialogue that we're having today
Mhm.
because we've got two different aspects and two different uses of charts. But bottom line, risk management was what technical analysis is all about. You know when you're wrong.
Yeah.
Whether yeah, oh yeah, you can
Yeah.
see it, right? I call it data visualization. You can see the
Right.
data, and you can
Yeah.
see when it breaks down. You can see what, oh boy, my trend is gone, or my moving averages are gone. So
Well, and,
what
and
you
last time you were on
do,
the show, Ralph, you
yeah,
were on with Tom Dorsey. So both of you had that
yeah,
experience of we've got to do our own point and figure charts. It's not like you
yes,
could have a
yes,
computer do it for you. It was
oh yeah,
you've got to do your own X's and O's on
oh
all the
yeah.
charts that you're interested in. And
Yeah.
I mean, it's a great
I missed
training
the,
thing.
I actually miss those days,
Yeah.
when you did it by hand. I have it now where I have it on my program where I have all the support and resistance levels of everything.
Yeah.
So I'm getting breakouts and breakdowns all day. I'm
Mhm.
updating. It's almost like doing the chart by hand. But
Yeah.
today you can have it, you know, use it. I encourage everybody to do that.
Yeah. At
You know?
least, I mean, for me, at least when I tried learning point and figure, the only way I could do it is you have to get some graph paper out and
Oh
do it.
oh
Otherwise, it
yeah,
just doesn't make sense to you until you
yeah.
actually do it yourself. At least
Well,
for me.
you got
Um,
it in your feeling in your fingers.
right, right. So Jay, you didn't have to do that as much. You and I both. I mean, I had to do a little bit. We had a daily graphs chart service, but it came out weekly,
Hmm.
right? So we had to kind of do our own, stuff there. But you've kind of grown up with the technology, and you saw the change in the NYSE. Going from fractions to decimals and everything in
Yeah.
between. And I mean, I remember the first time I was on the floor. I think they had just expanded to 5 rooms. There was the garage, the blue room. There was, the new. They kept on having to expand, and then it was like, whoop! Now, You got to show
Yeah,
stuff.
the new room is the hidden gem. Yeah, they're not very clever with their names. The blue room had blue walls. They had the EBR, which stood for extended blue room because it extended off the blue room. And then in the .com bubble, they needed new space, so they created this new room across from the blue room. You had to go across Exchange Place, this little hallway, and this new room had new technology, new floors. Even the newest brokers were in this new room, and they called it just that, the new room, because they're not very clever. And that was the peak. That was you knew when we extended it, that was the peak. So we've shrunk to just one room, that main room. We still have the garage, but we keep we keep the deviants in the garage. That's usually just for surveillance, and we don't want to deal with surveillance at all.
Well, and so on the floor, you saw from kind of like, again, getting that feel from people and everything to starting to get that communication with those big big packs that you were carrying around, and so how did you kind of start using or relying, I guess, more on charts rather than kind of the crowd, the feel of the room?
Yeah, I mean, when you had a crowd, support was the guy in front of you who kept buying the stock. And when you had an idea when he was almost done as a market maker, you take him out and boom, we have a breakdown. And hey, yeah, you had an advantage because you saw support and there was resistance coming in here, selling it at this level. And that was it was easy. I didn't like to admit it back then. I thought we were really smart, and we were. I mean, you had to have a skill set to understand and deal with all these people. But once you lost those people, support and resistance were in price patterns, and everything was price related. So if you didn't, and you come down to the floor now, all you see are people, the market makers that are there that still have an important role. They just don't deal with people. They've got 50 charts of the 50 stocks they're trading right in front of them. Without the charts, it's like, trying to drive, from point A to point B across a city without having Waze or your Apple Maps. Good luck. We don't have that roadmap like we once did, but the charts give you that roadmap. And just to circle back, you talk about risk management. I'm blessed that I now teach technical analysis at Fordham University. And one of the first things I say, just like a realtor, jobs number 1, 2, and 3 are location, location, location. In technical analysis, jobs number 1, 2, and 3, risk management, risk management, risk management. You're not going to catch the meat of every trade. You're not going to catch every bottom. You're not going to catch every top. In fact, you're rarely going to catch the top or the bottom, but you're going to catch the meat of a trade, and you're going to hopefully minimize the risk. The setups we talked about earlier in the show with Occidental and Baker Hughes, I'm more concerned, okay, if this doesn't work out, where am I pulling the ripcord and getting out? I take in losses all the time. But in order to survive in this industry, you have to avoid one thing, and that's a big loss, because you can't recoup from that. So, when you teach technical analysis, when you utilize it, if you're going in there, I'm going to make all this money now, I know the charts, that's great. I hope you do, but you better know the downside and use the charts to protect you from that downside, because bull traps and bear traps happen quite often. And we could break out in this S&P 500 and get to 6150. I think it's 6144.15 is the number. But we get there and we close above there. Okay, risk on, let's go. But if we fail to hold, I'm gonna bail, and that's okay. I've been stopped out too many times to count, and yes, I've missed some trades by trying to get in too early, but that's it. But when you are in a winning trade, you let those winners run, and you let the trend dictate it, and you take profits along the way. You're not going to hold something for the duration of a trend. You want to take profits and then go to other places where you see some strength. So to me, it's all about that risk management, to circle back. And as the floor has changed, one thing has always remained true. It's the only thing that matters, and that's price. And that price action is where we make money. And, I don't want to sound callous or anything, but that's what we're in this job to do. We're here to make money. The traders here that watch your show want ideas that set them up to be in a favorable position. And that's what I try to give an audience, and I try to do it quickly and, without going through, as Ralph said, all the intricacies. Like, yes, I'll use Fibonacci levels to basically justify what my initial thoughts are, but the initial thoughts are simple. And if you can keep it simple and be relatable to an audience, then they're going to ask you back on the podcast or on the show that you're doing. And you can be respectful, and you don't want to go on there being arrogant, because the market will kick you right in the you know what if you think you're better than the market. The market is a very humbling place, and you just gotta take it day by day, and that's what we do.
Yeah, no, absolutely. And Ralph, to that point, I think one of the things that with Louis Rookheiser saying that your group was a bunch of elves, sometimes some people might think that there's some magic to it, and that there's kind of a 100% guarantee. Oh, if you see this in the chart, that this is what's going to follow. But nothing could be further from the case. As Jay just shared, you might try something multiple times, get stopped out, and that's just the way it is. You just don't take the big loss. So how did you kind of get to the point where you were okay with, oh yeah, this gives me an edge, but I know that it's not that 100% guarantee?
I remember when I was first plotting charts. I mean, my background is history and political science. I didn't have any economics in college or anything.
Mm-hmm.
It's a long story how I got into business, but I remember after maybe 6 months of plotting charts, first time, for my first 6 months in the business in the late 60s, and someone said, "What do you think of gold?" I said, "Looks good to me." The guy said, "What do you know about gold? You don't even know what it looks like." I said, "No, but I could see it's going up. Here's the price, it's going up." Technical analysis empowers you. All of a sudden you have an opinion on something you never knew about.
Yeah.
And I respect that. I really do. And I like what Jay was saying, that on the way up, you're going to start taking profits. I'm going to quote my father. He used to say, "Remember, Ralph, you never lose by taking a profit." So
No, absolutely.
if I'm early getting out, fine, so be it.
Yeah. As long as I'll just add the addendum, as long as you're cutting your losses, because you can take profits, as much as you want, and they can be great. But if you let that one big loss get away from you, there go all your profits.